Hello everybody, this is Matador from freetradingvideos.com. It's 11:55 a.m. Eastern Standard Time on July 15th, 2010. Well, this is what we were talking about this morning. Markets were selling off pre-market, even in the face of some good news. All right, mixed market, but after a multi-bar run-up, it's not rare to see them crash like this. So in order for me to have wanted to go higher, even though the news was reporting everything being dandy, we saw something different. Huge sell-off, hovering on support right through here, and subsequent sell-off. Again, makes a lot of sense. Increasing volume on the way down, decreasing volume on the way back up. Even though we're trying to chew our way out of this S&P 500 ETF in an intraday uptrend, some people would consider this to be a bit of a bear flag. I like the idea of this being sort of a cup and handle, and it's breaking out resistance once being support, or once broken becomes support, and we're chewing our way past this 108.80 mark. Of course, 109, 109.20, 109.40 is resistance now on the way back up. All right, so that makes a lot of sense to my eye. Even the 109.60 mark, you can drop a line in here. Above that, all of our predefined areas of resistance, especially 110 and 110.20. So good stuff on a higher time frame. You can see where we came from. This is still, a fairly damaged high base now, but we're still trying to hold up. A lot of times resistance, once broken, becomes support, and vice versa. In this case, support at 109, once broken, is looking to become resistance. So be very careful of that, especially since that coincides with a break of the 200 MA on this 15-minute chart. On a 60-minute chart, that's a nice break of the 50 MA. Just zoom in here. So there's a lot of subtle but dramatic damage done intraday here. On a daily chart, however, if we were to close right now, this is not at all unexpected or rare, and we got our perfect gap fill back to the 108 mark, something we were talking about this morning even. So looking to have the markets hold up, make a higher swing low, and chop around and break out of 110 would be an excellent scenario. I'm looking for that higher swing low. That's why it's smart not to trade long into a multi-bar rally into resistance. It just makes all the sense in the world. Markets are holding up technically very, very well. It's exactly what I want. And with that said, let's take a look at the broad market internals. You can see now that we've been around 1.4, 1.6, even 2.0 on the trend. Very solidly bearish all day long, including right now. The trend Q has been bearish to the point of 2.0, confirming, but then dropping off nicely back into the neutral range. So a bit of a divergence between the trends, and the VIX solidly running higher all day long, and now sort of doing a pullback as the markets rally. I would need to see this fail dramatically before I ever thought about going long. And if I'm going to go short, I need this back up above 27. So good stuff, everybody. That is a quick run around the markets, but a meaningful one, and watch for any subsequent sell-off and the last little bit of support here at 108.20. Below that, to zoom out here, next logical spot is still the 108 mark. Right, you have to go out and kind of scrunch this chart up to see that, but there he is, this area of 108. Below that, 107.50. So good stuff, everybody. Looks like it's happening right now. We'll get back in there and fight. But with that being said, high volume sell-off, tepid rally on low volume. Watch out for this. Good stuff, everybody. Hope you have a great afternoon. Look forward to D7's video at the close, and I'll talk to you later.